In this video, you will learn about the tax deductibility of expenses incurred on renovation and refurbishment works. Sometimes, businesses need to renovate or refurbish their premises to remain competitive and to attract customers. Renovation and refurbishment expenses, or R&R expenses, are generally capital in nature and are therefore not tax deductible. However, to help businesses reduce their business costs, Section 14Q was introduced into the Income Tax Act to allow a tax deduction for qualifying R&R costs incurred by businesses. The amount of R&R expenses that qualify for tax deduction is capped at $300,000 for every relevant 3-year period. Tax deductions for R&R expenses must be claimed over a period of 3 consecutive years of assessment, or YAs, on a straight line basis, starting from the YA for which the qualifying R&R costs were incurred. Section 14Q deductions are given as long as the company continues to carry on that trade or business for which the R&R costs were incurred. Some common examples of qualifying R&R costs include water and gas systems, flooring, electrical installation, and lighting. These items are allowable deductions as they do not affect the structure of the business premises. This means that as long as prior approval from the Commissioner of Building Control is not required for the R&R works carried out in the business premises, the R&R costs will be considered as qualifying R&R costs for Section 14Q deduction. However, costs incurred on designer or professional fees, antiques, fine art, or any works carried out on places of residences provided to employees are not allowable under Section 14Q. In YA 20X3, SE Pastries Private Limited incurred $18,000 of qualifying R&R costs. SE Pastries will claim Section 14Q deductions evenly over 3 YAs, so $6,000 will be claimed for each YA from YA 20X3 to YA 20X5. BB Bakery Private Limited's situation is a little more complex. In YA 20X2, BB Bakery incurred $180,000 of qualifying R&R costs. Assuming that YA 20X2 is the start of BB Bakery's relevant 3-year period, BB Bakery will claim $60,000 for each YA from YA 20X2 to YA 20X4. In YA 20X3, BB Bakery incurred another $160,000 of R&R costs. Let's take a closer look at these items. It seems that not all items in this list are qualifying R&R costs. Designer fees are not allowable for Section 14Q claims, so BB Bakery has to exclude the designer fees of $10,000. This means that the total qualifying R&R costs is $150,000. But wait, that brings BB Bakery's total R&R costs incurred in the relevant 3-year period to $330,000. This exceeds the cap of $300,000. The qualifying R&R costs to be allowed for YA 20X3 will be capped at $120,000. This is calculated by taking $300,000 less $180,000 incurred in YA 20X2. As Section 14Q deductions are to be claimed evenly over 3 YAs, BB Bakery will claim $40,000 from YA 20X3 to YA 20X5 for the qualifying R&R costs incurred in YA 20X3. In YA 20X3, BB Bakery will claim $60,000 of qualifying R&R costs arising from YA 20X2 as well as $40,000 of R&R costs arising from YA20X3, making it a total of $100,000. BB Bakery has already reached the cap of $300,000 for the relevant 3-year period. Bobby needs to take note that if BB Bakery incurs any more R&R costs in YA20X4, the amount incurred will not qualify for Section 14Q deductions. Let's recap. Section 14Q deductions are granted evenly over 3 consecutive YAs as long as the company continues to carry on that trade or business for which the R&R costs were incurred. Section 14Q deductions are subject to an expenditure cap of $300,000 for every relevant 3 consecutive YAs. Section 14Q deductions are given on qualifying R&R costs that do not affect the structure of the business premises. Costs incurred on designer or professional fees, antiques or fine art are not allowable under Section 14Q. You may visit the IRAS website or contact us for more information.